have our experts joining us this afternoon. We have Dipan Mehta as well as Kunal Bothra on the show. Very good afternoon to you, Dipan, as well as Kunal. Thank you so much for joining us in ET Now. And Dipan, there are a lot of news pointers for us to focus on and for the markets to focus on, but there is only one word that goes along with Indian markets at this point in time, and that has to be resilience.
Yeah, right. I think nicely put by you that yes, Indian markets are showing resilience. But look, we have seen these kind of events before. So the uncertainty and the surprise factor is not there. And I guess that now it'll be business back to usual. And whatever has to be done has been done by the government. A fitting reply has been given. And the news flow will now move back to rather the market will now focus on earnings and fundamental related news flows. And of course, there's this Trump tariff hangover, which is still there, which we need to deal with. But at least this particular threat and uncertainty seems to have got resolved for the time being.
So that sort of an uncertainty is actually out of the way. But also there's another factor that everyone's watching out for is the fact that what is happening on the tariff front. Now you have the India-UK FTA as well, a crucial one at that. You have all the stocks actually reacting to that. And also the fact that in the next 2 weeks or so, Trump has indicated that he is going to go ahead and sign more trade deals. So it looks like that sort of a factor also should actually move out of the way, isn't it?
That's right. I think on the whole, very constructive on the market for two reasons. One is that normally monsoon is a great season for stocks. And secondly, I think in a couple of months' time at the outside, you will have clarity on Trump tariffs. And that way, I think businesses can start getting back to normal, do their planning in terms of export markets they want to pursue, supply chain changes, whatever is required. And good monsoon, cut in interest rates, lower TDS on salaries, which will start flowing in from May itself. All of these things could lead to better earnings growth going forward. Frankly, so far, I've been a bit disappointed with the earnings that have come through so far, but I think that may change in the September quarter or so. So, as I said, broadly constructive on the market, and I think that all corrections are good opportunities to buy.
Dipan, so what is the view on that? Do you think that while we've recovered all through April, it's going to be back to sell in May and go away, or do you think that may not play out this month?
No, I never sell in May and go away. And it is always my gut feel that May is a good month to buy because June, July, August markets generally rally. I have this theory that when it's raining outside, markets generally tend to do well over here. And there's a logic to it also because all of the businesses do tend to slow down and money flows into our market. So I'm not of the view that one should sell off at these levels. As I said again, we're very positive on the market and all corrections are great opportunities.
I never said it was you. It was actually London traders who first coined it, and seasonality also depicts so. But Kunal, what is your own sense? Does it seem like this consolidation is for a move up, or do you think the market could give off a little bit of gains that we've accumulated all through April?
No, I think it should be the former where I would believe that there could be a chance that the markets may actually start to move up. Now, just to add the one factor for me, seasonality. Over the last 8 or 9 years, over the last months of May, we've actually seen alternate seasonality, alternate behavior for the Nifty, where over the last 8 years we've seen 1 year to be positive for the month of May, the other to be negative. And the last year, the month of May, we were actually down for the index. So maybe that could be an indication that this time around could be positive. The other second most important factor for the month of May seasonality is that the second half of the month of May, potentially over the last 7 or 8 months, have always been positive for the index, where we've seen recovery coming back into the benchmark indices, and Bank Nifty apparently has actually done reasonably well in the previous attempts. So that, I believe, could be the standout feature for the markets this time around as well. You're already seeing some strength which has emerged into the banking index. The market breadth is opening up. Yesterday, the advanced decline ratio was almost, I think, 1:4, 1:5 in the favor of declines. Today, it's slightly in favor of the advances, 1:1. But I believe that that's giving an indication that the market volatility could settle down and the market breadth could start to open up. So all of that indicates that we should be moving up higher potentially over the next few weeks.
Right. So, Kunal, have you spotted some of the stocks that one can look at actually, given the fact that we should be bracing ourselves for some good up move in the markets going ahead?
Yeah. So As I said, banks could be an interesting play. There could be a chance where maybe the private sector banking names like ICICI Bank, HDFC Bank, I think they could start to move up higher into the second leg of uptrend. We've seen very good price action coming out from two important packs. One, of course, is Reliance Energy, Reliance Industries itself. That stock has done reasonably well, crossing back about the 200 DMA and the 1400 mark, which was a major resistance. And the second is the OMC pack, where you've seen BPCL, IOC, HPCL. I think these stocks have given a classical price volume breakout. So expecting the move further to broaden as well as strengthen into these stocks.
Just want to look at some of those capital market buzzers in trade. Take a look at BSE. That, of course, is the star performer in trade right now. That holding out very well. It came out, of course, with its numbers as well. And it saw revenue uptick on a sequential basis over 10%, 152% jump up on the EBITDA, and these are all sequential numbers that I'm reading out. The PAT as well saw a solid 126% uptick coming in. Dipan, we've often talked about the capital markets theme, and when companies like BSE deliver the way they do, or for that matter, even NSE when it came out with its numbers, you get more and more convinced about this particular theme. But do you think it's time to deconcentrate and move away from exchanges? Any other themes within the capital market space that you find interesting, perhaps?
Actually, you're right. I think more than capital market, the real investment theme is financialization of savings. And if you want to follow that theme and stocks which emerge out of it, there are, of course, the stock markets or the exchanges. Then there are the asset management companies. We have a couple of registrars also which are listed. And then there are the wealth managers. So that encompasses the entire investment theme of financialization of savings. And of all of these sub-segments, we are most positive on the wealth managers. I think they are great long-term growth dynamics, secular growth stories, limited cyclicality in their revenues as well and profitability. And more investors, HNIs are going for advisory services. And these companies tend to do well in a good capital market or good bull market as well. And I think they are reasonably valued. So wealth managers is where our focus is. Of course, exchanges will do well from time to time, but they are highly cyclical. And at these valuations to buy BSE, I'm not so sure. But amongst the exchanges, we are most positive on MCX, where the options volume is still to start reflecting in the top line, bottom line. And that also, I think, is a good opportunity and a good growth story from an investor's perspective. Having said that, these are companies in which we and our clients are invested in, so our views could be biased.
Right. So MCX is the stock that actually looks better when you talk about the exchanges. BSE, definitely that one has seen a spectacular rise in Kunal, in excess of about 70% since the March lows is what the returns that BSE has given.
Yeah, and I think if you add today's 5-6%, should be more than that.
All right. So what's the way forward? Do you think that it will hit a pause button now, given the fact that it's already seen a sharp rise, especially at a time when you have the markets actually see a sharp correction and then finding its way back?
So, on the stock, we generally feel that maybe the stock could just about continue to trend up higher. Maybe the pace of rally could just about drop down a bit, because now what's happened is that many of the indicators have started to come back into the sub overbought zone. So we are not into that overbought territory. There are signs that many of the indicators have started to come back into neutral territory for BSE, even though the prices have moved up higher. So that's a classical case of a divergence on the indicator front. But that doesn't mean that the stock would go into a sharp correction. But I sense that it could now just about drift gradually on the upside. So maybe over the span of the next 2 to 3 weeks, I would actually expect the stock to say come closer to that 6,800, 7,000 mark. But that could probably happen with a lot of volatility and very minor phases of trend. So still remain bullish on BSE largely on the long-term charts, unless the indicators, they start to show signs of a major reversal, which I don't anticipate as of now.
I just want to play that soundbite as well that we had from Karan Tarani earlier today on the impact of UK FTA on the alcobev industry. Of course, cases in point, largely the one sensitive one would be United Spirits, wherein there is going to be definitely some margin pressure coming in eventually because of the MRP price reduction. In fact, let's hear out the expert opinion that we got earlier today.
MRP will see a cut as far as duty paid Scotch in India is concerned, but the fall is not more than 10 to 15% in our assessment as of now. Now, what this does is that this will obviously give a lot of fillip to Scotch volume growth. It kind of get the prices of upper prestige and the entry level luxury segment closer, in terms of gap. So United Spirits will be the big beneficiary out of it as far as volume offtake is concerned. But I think if you look at their business model, the bottled in origin, the bottles which are there, which in terms of the parent arrangement with Diageo, the profitability and the EBITDA margins are capped there. So this will give fillip to growth, but as far as profitability is concerned, it's going to have a negative impact in terms of EBITDA margins, which means that effectively the net positive impact will be very small for United Spirits.
The UK-India FTA is a mixed bag for our industry. We had definitely recommended that there could be a drop because we have been in negotiations and the government has reached out to us. The 75% reduction will be obviously helpful to all the importers of bulk Scotch because yes, a lot of Indian blended whiskies do put in bulk Scotch. So all the manufacturers and marketeers of IMFL will have a benefit in terms of the bulk Scotch. However, the bottled in origin drop without a concomitant minimum import price kind of a cap may and could lead to a surge of cheaper Scotch whiskey, flooding our country. And if the same template is followed for other, countries, especially in the EU as well as the US or Australia or New Zealand, where wines are a very predominant category, then the Indian wine industry could get adversely impacted because no one gets bulk wines per se, but they will definitely get bottle in origin, and that could create issues.
Right. Dipan, I want you to come here on the Alcobev impact of the UK FTA trade deal getting signed, because what we're understanding is that there will be growth because, the MRPs are going to get cheaper and there will be that volume boost, but that growth is going to come in with an impact on profitability. Tell me, how are you reading this? Dipan?
Sorry, I didn't get the question about the...
No, I wanted to understand as to what the liquor industry is going to be staring at and the impact of the UK FTA, because while volumes may actually get a fillip, but it will be at the cost of margin and profitability for sure.
No, Aisha, it's not going to make a very big difference to the profitability or the volumes. When it comes to the alcohol industry, the critical variables for the earnings is the state government policies on distribution and pricing. And there's a lot of interference from state governments on these counts, which have a material impact on the performance of these companies. So while long-term trajectory is great, I think there's a lot of earnings volatility because, say, one state may decide to not offer a price hike or may put some curbs on distribution. So all these challenges keep coming up, and really the managers of the alcohol industry have to wade through a lot of compliance-related issues, which is always quite challenging. So I think it's generally positive for the industry as a whole, and it will increase the consumption in an indirect way because costs may go down. But as I said, I think for the listed players, I don't see any material change in their earnings estimates or their growth trajectory.
Could spot this as an opportunity and perhaps hike taxes. Let's see how this entire story plays out. But